Morning. It's a pleasure. I'll start again. Good morning and a warm welcome to the Financial Intelligence Centre's webinar on non-profit organizations. Thank you for joining us this morning. Hopefully I'm audible on your side. If you have any technical issues, please try to maybe exit the session and rejoin. Usually the sound should be clear and there should be no issues with hearing and so forth. But if you do have issues, you can leave a comment in the chat box as well. I'll be your host for today's session. I'm Yolandi and I'm part of the guidance and prevention team here at the FIC. I'm joined by my colleague from the monitoring and analysis team, Mbali, who will take you through some of the slides this morning. So as nonprofit organizations, you might be wondering why exactly is the Financial Intelligence Center interested in you guys? Well, that's quite simple. We want to create awareness within the nonprofit organization sector. We want to create awareness of the risk that you face. And so that you know the risks are there of money laundering and terrorist financing and proliferation financing, so that you can take the steps and measures within your organization to better protect yourselves against being abused by criminals to launder their funds, and very importantly, abused by terrorists to carry out terrorist attacks. So this session, please take it in a good stride. It is definitely there to promote your understanding of what is required of nonprofit organizations and also to protect nonprofit organizations. I'll just mention briefly that nonprofit organizations provide such a vital role within society. So it's definitely one of those functions and roles that we need to protect. You'll see on the news time and time again, it is reported that a nonprofit organization's funding was abused for the incorrect purposes. And that's the type of activity that we actually want to create awareness that you do face that risk of being abused. And also, there is measures you can take to safeguard your organization against abuse by criminals. So that being said, there will be an attendance register that will be posted in our chat box. Please complete the attendance register. We are going to send out this presentation to everyone that completes the attendance register. Also, you can then also get a copy of the Public Compliance Communication 41. So that will be available then. That Public Compliance Communication 41 is actually guidance that the FIC published for nonprofit organizations, and it's just to guide you in terms of your understanding of what you can put in place. So yes, without further ado, I will take you through the agenda for the hour, and we've only got you for an hour. So there we'll just provide you with a general overview of the Financial Intelligence Center. And then also, so the Financial Intelligence Center is a domestic government type entity in South Africa. And then also who the Financial Action Task Force is. That is a sort of international body that South Africa is a member of. And we'll also take you through the meaning of money laundering, terrorist financing, and proliferation financing. We'll set out some vulnerabilities that you face from money laundering and terrorist financing perspective, and then also some examples of how nonprofit organizations have been abused in the past. There is a reporting mechanism, very importantly, it's called a voluntary disclosure reporting report, and that can be filed through to the Financial Intelligence Center, along with reporting any suspicious activity that you think is linked to a crime through to the South African Police Services. Then also, there's an obligation for, there's actually an obligation placed on everyone that no one should provide finances to a terrorist or or at least for terrorist activities. So that there, it's part of targeted financial sanctions, and I'll explain that a bit more in detail in the coming slides. And then lastly, we'll set out certain recommendations that you can, you can put in place. And those recommendations are aimed at safeguarding you. So really, the session is about raising your understanding of what money laundering is, what terrorist financing is, and what proliferation financing is, and also what can you do when you suspect your organization is being abused for either of those crimes. Again, I'll ask you at this point in time, if you haven't yet completed the attendance register, please do so. So off to our first then point of the agenda item, and that is the Financial Intelligence Center. Who exactly is the Financial Intelligence Center? So the FIC was created in terms of the Financial Intelligence Center Act, and it is a regulatory body. We do receive reports on money laundering, terrorist financing, and proliferation financing. We receive these reports from various different institutions. The main reporters are referred to as accountable institutions. And we have a Schedule 1 to the FIC Act, which actually lists a whole list of different organizations that are deemed accountable institutions, such as banks, estate agents, and credit providers. We also have a further category of businesses that if you have a business and that business is not an accountable institution, so that business needs to file through a certain report, which is called a suspicious and unusual transaction report, through to the center. We also ask for voluntary disclosure reports from non-profit organizations. So that in all is the organizations that we asked to file reports with the FIC. The FIC can then analyze those reports, and the reports include suspicious and unusual transaction or activity reports. There, if you suspect funds are linked to a crime or the proceeds of crime, you can file through an STR. And then we've got a cash threshold report. That is when large cash payments are made to or from accountable institutions, and they need to file through a CTR. We've also got a terrorist financing report. That's called a TPR. And that's where if any of those accountable institutions become aware that they're dealing with somebody who is a sanctioned person, then they must file through a TPR through to the center. And then finally, and most important for this session today, is a voluntary disclosure report. That's the type of report that we asked from a non-profit organization. It's totally voluntary basis, meaning the FIC Act does not place an obligation on non-profit organizations to file it, but we do strongly encourage non-profit organizations to file through this voluntary disclosure report through to the center. And you can file it through either when you have a suspicion that funds are linked to money laundering or the proceeds of crime, or we have a suspicion that funds are linked to terrorism. That's the main reasons why you would file through a voluntary disclosure report. So the FIC then takes all of those reports and they'll then interpret it and analyze it, and they'll develop what's referred to as financial intelligence reports, and they'll then send that through to law enforcement and other competent authorities. The reports that the FIC actually develops is then sent to places like the South African Police Service, the National Prosecuting Authority, South African Revenue Service, and also other regional and international bodies, who then can take that matter further. The National Prosecuting authority can obviously prosecute based on information that we provided. South African Police Service likewise can investigate and go through that processes that they need to follow. South Africa, as I've mentioned, so it's also a member of an international body, which is referred to as the Financial Action Task Force. And this Financial Action Task Force is then an international standard-setting body. So they set standards on money laundering, terrorist financing, and proliferation financing. Those standards are loosely referred to as recommendations. So they'd make certain recommendations to the country as South Africa. We would then implement those recommendations through our domestic legislation and also through our processes in country. FATF has 37 members, and they've also got regional bodies or regional organizations at least. South Africa is a member of FATF, as well as one of the regional bodies, which is the Eastern and Southern African Anti-Money Laundering Group, that's ISAMLAC. And what is important about being a member of FATF is that obviously it gets to, it ensures that our domestic legislation is at an international level and that we apply and implement our domestic legislation according to international standards. It's also, we're also subject to testing, which is referred to as a mutual evaluation. That's where FATF actually comes into the country and they assess the country to see whether or not the country's legislation and processes are on par with their recommendations. So the last time they came was in 2019. They conducted a mutual evaluation and the findings were published on that mutual evaluation. You can have a look at their website just to get a better understanding of the results that was published in relation to South Africa. Just important is FATF Recommendation 8, which deals with non-profit organizations. And there it states that a country should review the adequacy of laws and regulations that relate to non-profit organizations, which country has identified as being vulnerable to terrorist financing abuse. I'll just stop at that sentence to highlight that. We're not saying non-profit organizations are high risk. What we are saying is that certain non-profit organizations are vulnerable to abuse, specifically for terrorist financing. So please, to all entities, to non-profit organizations, understand that it's not all non-profit organizations that are high risk. Rather, these are vulnerable to being used by criminals for their terrorist financing or money laundering. And that is the reason why you need to put in place measures to combat that risk. So there is the risk that terrorist organizations actually pose as legitimate non-profit organizations. There's a risk where funds that's meant for legitimate purposes are then transferred to illegal activities. So there it's basically exploiting legitimate entities as conduits for terrorist financing. And then also there's that risk of concealing the diversion of funds which are meant for legitimate purposes to terrorist organizations. So those are all of the risks, and we need to put in place laws that are adequate to mitigate the risks and also processes that are adequate to mitigate the risk. If you look at immediate outcome 10, there it deals with it. That's also for your information. And then the findings of the mutual evaluation, just briefly, if you look in the center of this page, you'll see it says there are 8 non-profit organizations, and right below that R8, it says NC. NC meaning non-compliant. This was the rating in October 2021 that was released in the Mutual Evaluation Report. It says that we are not meeting the measures as set out in FATF Recommendation 8. South Africa as a whole needs to update our laws in order to meet Recommendation 8. What happened from 2019 is the legislation was then updated. A follow-up report was published in November 2023. And there, that follow-up report, you'll see, if you again look at the center of the page, Recommendation 8, our rating has moved up from non-compliant to partially compliant, meaning the implementation of new laws dealing with non-profit organizations aimed at combating the abuse of non-profit organizations is actually improved the rating. But we do want to improve it to a largely compliant and then eventually compliant status over time. So there is still work to be done in this space. That being said, just a quick snapshot of the legislation. It's the FIC Act and then the POCA Act, and there Prevention of Organized Crime Act, which criminalizes money laundering, then POCTATARA, which actually criminalizes terrorist financing. Have a look at these pieces of legislation in your own time. It all does speak to what we are trying to raise awareness about today. That being said, I'll hand over to my colleague Mbali, who will take you through the rest of the presentation. I will then just place myself on mute and hand over to my colleague. Thank you.
Thank you, Yolandi, and good morning, colleagues. I'm Bali Tangoti. I'm an analyst with the Monitoring and Analysis Unit. So I will take you through the slides whereby we'll be looking at the abuse of non-profit organizations and their vulnerabilities. As Yolandi did mention before, that it's not all the NPOs which have been identified or which are at risk of being misused by criminals, although there is that small percentage. So today we'll just be looking at ways to combating that risk. So as we know that non-profit organizations play an integral role in complementing the government in addressing the social ills in communities. Unfortunately, they still face risk of being abused by terrorist financing and money laundering purposes due to the nature of their structure, income generation, and beneficiary payment methods. That's a higher risk for some NPOs to be misused by criminals and terrorist organizations. Therefore, I'll be briefly highlighting the difference between money laundering, terror financing, and proliferation finance. While money laundering and terror financing differ in many ways, they often exploit the same vulnerabilities in financial systems that allow for an inappropriate level of anonymity and vagueness in the execution of financial transactions. We're now going to look at the money laundering and terrorist financing definitions, although we all do have our own explanation and definition. But let's now look at what exactly is money laundering as defined by the FIC. Money laundering is the process used by criminals to hide, conceal, or disguise the nature, source, location, disposition, or movement of the proceeds of unlawful activities or any interest which one has in such proceeds. And then there are stages in which the criminals hide these proceeds of crime. Because you commit a crime, then what you get from there will be proceeds of crime. Then how do you now hide these proceeds of crimes? Hence the stages. Criminals who have generated an income or proceeds from their criminal activities usually follow 3 stages to launder their money. The first stage is referred to as placement. This is when the criminals introduce their illegally derived proceeds into legitimate financial systems. An example of this, for example, it will be splitting a large portion of cash into smaller sums and thereafter depositing such smaller sums into various bank accounts in various banks as well. So various banks, while we are at various banks, you open many other accounts thereafter. The second stage is called layering. Layering can also be referred to commingling, for example, in terms of poker. This is where basically dirty money now comes together with clean money. So basically layering is the stage whereby the launderer engages in a series of transaction, conversion or movement of the funds in order to cloud the trail of the funds and separate them from their illegitimate source. The funds might be channeled through various means, for example, purchasing of property or selling it soon after. The launderer could be simply wiring the funds through a series of accounts to various banks. The last stage will be integration. This is where now the launderer has successfully done the 2 stages, placement and layering. Now at this stage, they are causing the fund to re-enter the economy and appear as if they are legitimate. The launderer might choose to invest the funds into either real estate, luxury assets, or business ventures. So although the use of all these 3 stages is common, it is not always used by the criminal who wishes to launder money. In some instances, criminals may choose to place the illegally derived funds into the economy by merely depositing the money into his or her bank account without any layering being done. They can then withdraw the money and use it at their own will. That's integration. But we should bear in mind and take cognizance that in money laundering, the goal is to conceal the illegal nature of the source of funds. Let's now look and bear in mind the goal. Let's now go to terror financing. There we will also look at the goal. Basically, terror financing or financing of terrorism is the collection or provision of funds for the purpose of enhancing the ability of an entity or anyone who is involved in terrorism or related activities to commit a terrorist act. Funds may be raised from legitimate sources such as personal donations, membership fees, and profits from businesses and charitable organizations. But funds may also be attracted or be raised from criminal sources such as the drug trade, smuggling of weapons, smuggling of cigarettes, fraud, kidnapping, and extortion. We can see from the media reports that there is an alarming trend of kidnapping for ransom on the rise in South Africa. So we should also bear that in mind. The terrorism financing process typically involves 3 stages: raising, moving, and storing. So raising can also be referred to as attracting. This is where the funds are attracted or raised via numerous methods, including legitimate means, like I mentioned, donations, membership fees, self-funding, and criminal sources as well, such as fraud, kidnapping, and extortion, as highlighted earlier. So now you've attracted the funds. The funds needs to be moved. This is the second step, moving of funds. Moving of funds to an individual terrorist or terrorist group, network, or a cell through a series of knowing or unknowing facilitators and or intermediaries by means of banking and remittance sectors, informal value transfer systems, bulk cash smuggling, crypto assets, smuggling of high commodities such as oil, art, antiques, agricultural projects, as well as used vehicles. So over the years, we've seen the high cases whereby people were caught with smuggling cash. We've seen through the media reports such cases. So we need to take cognizance of that. The last stage in terror financing is using of funds now. The funds are used through payment when needed to further the terrorist organization, terrorist group network, or sales goals, including living expenses to purchase weapons or bomb making, and also for recruiting and training now of the potential people who will be joining the terrorist group. Intention with terror financing is to use the funds to support the terrorist acts and terrorist organizations and individual terrorists. The goal here, remember in the beginning I said, let's take cognizance and differentiate between the two goals. The goal with terror financing is to conceal the financing and nature of activity being financed. So let's bear that in mind. The goal in money laundering is to conceal the illegal nature of the source of funds. Goal in terror financing is to conceal the financing and nature of activity being financed. Thank you. Let's now look at proliferation financing. Proliferation financing is an activity that has or is likely to have an effect of providing property, a financial or other service or economic support to a non-state actor. Proliferation financing, as defined by the FATF, is defined by the FATF as the provision of funds or financial services used for the manufacture, acquisition, possession, development, transport, transfer, or use of nuclear, chemical, or biological weapons and their means of delivery, and includes any activity that constitutes an offense in terms of Section 49A of the FIC Act. Let's proceed to look at the vulnerabilities. As to now, we are looking at why exactly are NPOs vulnerable to abuse. NPOs are targeted by terrorist entities because they are easily and legitimately access. They have easy and legitimate access to materials, funds, and network. Terrorist organizations require same access to these same materials, funds, and network. But because the terrorist organizations are legitimate, and it is nearly impossible for them to receive these resources without scrutiny. Because of this reason, then, the terrorist organization place a high value on exploiting the legitimate sectors like the NPOs, for example, that are already within the access of these benefits and also have operations that are difficult to scrutinize. Additional reasons why NPOs might be vulnerable. So basically, this is what make the NPOs to be susceptible to have a higher risk of being to have a higher risk. NPOs attract a high level of trust. They are trusted by the public who pays donations. They are trusted by many people in different communities, and communities look up to the NPOs as they are seen as a group of individuals whose aim is to better the world in one way or another. For this reason, NPOs are trusted significantly more than profit-making organizations. NPOs are diverse in nature as they receive funds from many different sources, public and private companies. NPOs also receive a significant amount of contribution in cash because usually individuals and businesses donate in cash at fundraising events. So hence they carry a significant high amount of cash with them. Some NPOs also have a global presence in conflict areas and high-risk jurisdictions. And the last one that you can look into is that establishment is voluntarily inexpensive, quick, and easy. They are basically easy to set up. The above facts make NPOs vulnerable to abuse by criminals for their benefits. Some criminals use NPOs to clean their dirty money or proceeds of crime. Some criminals, like terrorists, use NPOs to raise money needed to conduct criminal activity. So now let's look at the proceeds of crime scenario. You are a government official. A supplier of your department hands you 5 million as part of your reward to get a tender. How will you go about hiding the proceeds from the authorities? So this is just a food for thought. Let's be mindful of the proceeds or of the funds that are deposited into your account, because it might happen that the funds are obtained via the scenario that we've just alluded to. So just bear in mind and be on the lookout when receiving funds in such instances. Let's now look at the red flag indicators. So basically, this is what we have observed through analysis of many cases within the monitoring and analysis. It might differ from case to case. It differs from case to case, and different organizations use different tactics and mechanisms. They use different tactics and mechanisms but these are just the red flags that we've highlighted as what we have monitored when analyzing the cases. So you can build that into your system to ensure that you identify possible irregular transaction and you combat the risk of being targeted by these criminals. So NPOs naturally, what we've noticed is that there are numerous cash deposits into accounts followed by large cash withdrawals, which then means that there will be no audit trail because cash is deposited and then cash is withdrawn immediately, or maybe it doesn't matter when, but once you withdraw cash, then there won't be an audit trail because you cannot account on as to what you use that cash on. Secondly, there's no indication that the NPO is involved with charitable causes. For example, some NPOs will set up a website and advertise themselves as helping the poor and vulnerable people. And people will be sending money through electronic transfers into the organization's bank account, but the actual organization is just a front. It never supported the poor within the community. So that's what you've noticed as well. And misappropriation of donor funds and obscure references such as the vague alphabets might be ZZZ, AOT. So this is just to create ambiguity and anonymity. Using of bank accounts for business purposes after being exempted by SARS under Section 18A of the Income Tax Act 1962. So as we know that SARS exempted the NPOs from submitting tax returns. So what most businesses do is that they will register themselves as being NPOs, which then make them to be exempt from paying tax. But what you've noticed is that the actual business that is being conducted the business conducts the actual business. It's not an NPO. We've also noticed excessive salary payments and transactions referred to as loans. We continue with the red flags. NPOs misrepresenting or lying about registration with the Department of Social Development. So here NPOs will say that they are registered with the Department of Social Development, but once we check them, they are not there. So this is also what we've identified. Large number of cash checks being issued. Although we know that checks are no longer in use, but we do have one or two financial institutions which still do have this facility available. So some NPOs still use this facility. NPOs will have accounts with various banks, as well as funds are sent to higher risk jurisdictions. We've also noted funds being utilized for personal use, such as payments towards private properties, luxury motor vehicles, and airtime. We've also noted various payments to individuals which are not in need. Let's now look into an example of money laundering. First example, X steals a car and X sells the car for 20,000 Rand. X then pays 20,000 Rand into NPO's F bank account as a donation. X's friend, Miss K, works for the same NPO. Then Miss K pays the fund to X's wife, who is listed as an NPO F. So basically, this is a cycle whereby X was basically cleaning the money. He stole the car, then made a deposit into the NPO, but he's also a beneficiary in the same NPO. So his wife is the beneficiary in the same NPO. So the money goes back to him again. The payment to wife Z appears to be from a legitimate source, but it is not. It is the proceeds of crime and therefore money laundering. The donation payment to the NPO and beneficiary was done to hide the true source of funds, which was from theft. Let's look at example number 2 regarding terror financing. M operates as an NPO. The funds the NPO raises, M donates them to a foreign jurisdiction, knowing that the funds will be used to carry out terrorist attack. So this is basically an example whereby M is financing terrorism, which is illegal. Example, proliferation finance. Proliferation financing. G operates as NPO. The funds the NPO raises, G transfers them to a beneficiary in a foreign jurisdiction, knowing that the funds will be used to develop weapons of mass destruction. G is obviously financing the proliferation of weapons of mass destruction, which is illegal. See draft compliance communication 116 on the FIC website. Basically, it's a screening of employees for competence and integrity, scrutinizing of employees against targeted financial sanctions list as a money laundering, terrorist financing, and proliferation financing control measure. It gives guidance in relation to a number of matters concerning compliance with the obligations in terms of the FIC Act. Let's look now at abuse of NPOs case study. Basically, this is just to illustrate that the NPO will have various bank accounts with the various banking financial institutions, and they won't have just one bank account. They will have various bank accounts within the very same banking institution or financial institution. Let's proceed to look at the abuse of non-profit organizations case study. Misuse of NPOs by receiving grants from states and using the funds for personal expenses. The FIC received regulatory reports on suspicious activities in the account of government entity where it was indicated that the beneficiaries of funds meant for uplifting and empowerment of communities were diverted from NPO beneficiaries' bank accounts to individuals in the employ of the government entity. Based on the FIC's analysis, it was found that more than 5,574,000 was paid to an NPO, and the funds were then distributed to various bank accounts. The FIC received notification via financial institution, regulatory reports, and analysis and profiling of various subjects. The FIC noticed that funds had been transferred to private individuals upon being paid to various NPOs. These funds were then laundered through the financial system using normal funds transfers. Funds were paid to the NPO, which in turn transferred these funds to the personal account of such subjects. In some instances, funds were paid to retailers where building material was purchased for the perpetrators, who would then collect the materials. Let's now look at extremism. Defining extremism. So the United Nations and other international organizations, individual FATF members, and have different terms to identify these threats. These include right-wing extremism, racially or ethnically motivated terrorism, far-right terrorism, ideologically motivated violent extremism, and extreme right-wing terrorism. It is important to increase the understanding of terror financing risks related to extremism. Basically, extremism is ethically and racially motivated terrorism. It's a complex and growing phenomenon that encompasses a wide range of actors. These range from individuals operating as lone actors or as lone wolves to small and medium organizations, as well as transnational movements which span across the borders and sometimes even continents. In June 2022, the FATF identified ethnically and racially motivated terrorism financing as a priority area for the task force and agreed to strengthen the FATF's understanding of the risk associated with this threat. The fact of someone having beliefs that most people think are unreasonable and unacceptable, it is also seen as an ideology or activity, attitude, feeling, action, or strategy that is contrary to mainstream views of a community or is in violation of general ethical standards. Extremism in behavior results in terrorism, crime, and cruelty, while extremism in belief leads to extreme attitudes and practices which can often be referred to maybe as a cult. Thank you. International money laundering trends. Basically, this is where we explore methods and typologies. Methods to use to launder proceeds of criminal activities and to finance illicit activities are in constant evolution. As the international financial sector implements the FATF standards, criminals must find alternative ways to launder their dirty money. So these are the trends that have been noted. Concealment within business or NPO structures, misuse of legitimate businesses, NPOs, use of fake identities and documents or identity documents, exploitation of international jurisdictional issues, purchase of valuable commodities, like precious metals, for example, use of trust and family members, use of gatekeepers. We've seen a trend whereby most companies will be using, hiring CAs, for example, or even audit firms. We've seen a lot of those cases in the media. Gaming activities, casino and horse racing sector, dealing in precious stones, there's another trend that has been noted. Illogical business NPO activity, sending off multiple payments for cashing at a higher charge. We've also noted multiple transactions with short period of time with no underlying business or NPO rationale. Multiple or repeat movements of funds between the accounts. One more trend we've noted is that missing documentation, normally to be expected from a legitimate business or NPO. Missing account activity, the accounts were not used to pay any of the normal running costs of a business or NPO as they may have been expected. National risk assessment. The national risk assessment details the terror financing and money laundering risk from a South African perspective, highlighting areas of concern. In the 2022 National Terrorism Financing Risk Assessment identifies terrorism financing risk and vulnerabilities currently facing South Africa. It aims to assist the government, private sector, and the general public to understand the associated risks and vulnerabilities and to assist in the implementation and appropriate preventive measures. So these are the risks that have been identified: cross-border flow of funds, risk context and materiality, legal, regulatory, and law enforcement framework or lack thereof, crypto assets and crypto asset service providers, companies, and trusts. Also identified was the money laundering threat picture, whereby illegal mining and smuggling of precious metals, modern slavery and human trafficking, illegal wildlife and environmental crimes, smuggling and trafficking of illicit goods and contraband, corruption and bribery, tax-related crime, fraud, drug trafficking, cybercrime. So basically, the NRA gives us a terrorist also financing threat picture and proliferation financing threat picture. Sector identification. During the analysis of the alleged terrorist financing activities by the FIC, it was identified that various individuals and business entities were utilizing NPOs to raise funds for their ideological cause. Due to current international threats and the dangers posed by extremist organizations and terrorist groups, analysis was specifically directed towards NPOs within the religious sector or any other sector, for example. There are many sectors which were identified. And that brings me to the end of my presentation. Thank you. I will now hand over back to my colleague, Yolanda.
Thank you so much for that. So now we've got a better understanding, or we've provided a better understanding to you, or explanation at least, of what money laundering is, what terrorist financing is, and also what proliferation financing is. And what's clear from the case studies is that you are at risk. It's clear that nonprofit organizations have been abused and are being abused by criminals for their for cleaning of dirty funds and also to channel funds to terrorists. So now the next part deals with what is the measures you can take to actually protect your organization. So you as a nonprofit organization, you can file a voluntary disclosure report, and that's referred to as a VDR. It is totally voluntary. I'll have to mention that. It is not covered in the FIC Act. So if you look at the Act, what is similar is Section 29. And then there from that, you'll see it's similar to what, and I can just hear an echo in the background. I'll just check with my producers. I think it's fine now. So let's, so there we'll just take you through the measures of what is a voluntary disclosure report, who should report, and also when. So there, nonprofit organization regulators, meaning the Department of Social Development, can file through reports, and also members of nonprofit organizations, founders, members, employees, any authorized representatives. So the VDR goes through to the Financial Intelligence Center. Again, I've mentioned it's totally voluntary. There's no legislative obligation. It's very similar to Section 29 of the FIC Act, but in actual fact, it's not. It's not covered in the FIC Act. We do ask that if you become aware of something suspicious and unusual, you file through that report as soon as possible through to the center within a reasonable period after becoming aware of that suspicious activity. So what can you file through? What can you file through as a voluntary disclosure report? If you see that the funds come in and you suspect it to be the proceeds of crime, meaning it's they're trying to launder the proceeds of crime, and that's money laundering, and you can report that through to the center. If you send funds to a beneficiary and the beneficiary is using the funds in a manner that you think is actually for terrorist activity, then they also, very important, file through a voluntary disclosure report. And as well as proliferation financing, if you fund anyone and you believe that they're misusing that funds for development of weapons of mass destruction, they again file through a VDR. I've mentioned this report is voluntary, but definitely as a nonprofit organization, you do have an obligation to report any crimes to the South African Police Services. So that goes without saying. If you become aware of any crime, report that through to your SAPS as soon as possible. So the reports can be based on facts and also on mere suspicion. You don't have to have evidence or proof of your what you suspect. You can just report your mere suspicion through to the center. And again, just to remind you, some of the factors that needs to be reported through if you think it's linked to the proceeds of unlawful activity or terrorist financing, if you think a transaction has no apparent business or lawful purpose, if you think it's linked to an evasion of tax, so that's where they registered for tax exemption, but they're not functioning as a proper non-profit organization, then you can file also a VDR. If you think its funds are or transaction is related to terrorist financing or the prohibition of a targeted financial sanction. So very simply put, that is what you need to report through to the center. And how do you report it? So if you go onto the FIC website, you'll see on our top right-hand corner, there is a button that says report. There you can just simply register or report. There you can simply first register. You have to be registered, and you'll register on the platform called the GoML platform. That's the registration and reporting platform that the FIC uses. And you'll register as a voluntary disclosure reporter. And then you can file through any reports, any VDRs on suspicions that you may have. So there, again, we're highlighting again that VDR is voluntary. There is no obligation on yourselves to report, but obviously you must not proceed with a transaction if you see that it is linked to a crime. When you do submit a voluntary disclosure report through to the center, please know that you are competent and you may be compelled to give evidence in proceedings that arise from that VDR. So that be it criminal or civil proceedings, you may be called as a witness to testify. Again, then the information concerning the identity of a voluntary reporter who has filed a VDR is admissible as evidence in criminal proceedings. So know that when you do report whatever information that you registered with, it can be disclosed. Submitting a VDR is not a defense against prosecution, and this is a key distinction if you look at Section 29 of the FIC Act. There it states that it's a sort of defense against being prosecuted where a reporter reports in good faith. So they note that don't proceed with any transactions if you think it is linked to criminal activity, and then you file through a VDR through to the center, knowing full and well that that won't be a defense against any charges of money laundering or terrorist financing, so forth. Submitting a VDR does not protect the voluntary reporter from criminal or civil action being instituted against the voluntary reporter. It's linked to the previous point, as mentioned. So, yes, have a look at Public Compliance Communication 41, and I'll ask the producers to drop a link to PCC 41 in the chat box there. And there's a whole part that deals with voluntary disclosure reporting, and it provides you with guidance there on voluntary disclosure reporting, as well as the legal consequences of submitting a VDR through to the center. So then so that's one of the measures that you can take, is to file a VDR through to the center. Another measure, which is very, very important, is you can screen all your donors, and you can also screen all your beneficiaries. You can screen them against what's referred to as a targeted financial sanctions list. That list is found on the FIC website. If you go onto the FIC website on the home page, there is a link to the targeted financial sanctions page. And on that targeted financial sanctions page, you'll find a search tab. You can just click through to the search tab at least, and then a screen similar to the one that's displayed will come up. There you can, when you're onboarding or when you're taking funds from a new donor, just to understand whether or not that donor is sanctioned, and also when you're paying funds to a new beneficiary, just to understand whether or not that beneficiary is subject to a financial sanction, meaning that person could be a terrorist or linked to a terrorist organization, then their name will be put on a targeted financial sanctions list. So if you will then put in all the fields there. You'll see name, identification number, place of birth, date of birth, nationality, any other information, or as much information as you do have, you'll put it in there and you'll click on search person. If that person is a sanctioned individual, a designated person, then the results will come up on the page stating whether or not they are, or if there's no results, it will also show you that there's no results and it's a miss. It's not a match. That's very important in that, that control is very important for you in that no person may provide services to a person who is designated or sanctioned. So you can't provide finances, you cannot provide funding to somebody who is involved in terrorist activity. It's prohibited in terms of Poctatara. It says that all persons and entities, including non-profit organization regulators, as well as non-profit organizations, are prohibited from providing or making available economic support or any other financial or other services to a person or entity listed in a resolution of the United Nations Security Council. So those resolutions are the targeted financial sanctions lists, basically. And there, that lists are published also on the FIC website, which is that previous slide I showed you, where you can screen all your beneficiaries and all your donors to see exactly who they are and to make sure that they're not designated. NPO regulators can check the FIC website then, as I've mentioned, and screen their beneficiaries information. So you can go onto the FIC website, the targeted financial sanctions page specifically. There's a whole host of information published there. There's a manual that you can download, as well as Public Compliance Communication 44A, which will provide you with a lot of guidance on this topic. So then there, practices to address terrorist financing risks and vulnerabilities. That's just the last point that I'll take you through. So we know that it's not mandatory that all NPOs register, but we are recommending that you register with the Department of Social Development, where you have not registered. So there you provide as much information on the NPO through to the DSD. Remain aware that you are vulnerable. You can be abused as a non-profit organization for terrorist financing, for money laundering, and for proliferation financing. Check whether your donors are legitimate and not sanctioned. Check whether your beneficiaries are legitimate and not sanctioned. Whether your beneficiaries are using the funds for the right reason. Very importantly, if you send funding overseas, those people in those foreign countries, the beneficiaries in those foreign countries, are they actually using the funds for the right reason? If you suspect they are not, you can file through that VDR and also do further checks on the beneficiaries. Keep records of your funds received and your funds spent. That's all part of good governance. A non-profit organization that has good governance obviously can understand exactly where funds are going and how it's being used. So good governance is a key control for non-profit organizations to combat being abused. Conduct banking with a bank. I think there the message should be steer away from cash. If you can rather send funding to beneficiaries in measures other than cash or cash disbursements or so forth, I think that's the message that we're trying to put across there. And if you find anything suspicious or unusual, report that through to the center report any criminal activity through the SAPs. And then there also, finally, you can refer to Public Compliance Communication 41. It sets out a whole host of these recommendations as discussed today. So then that brings us almost to the end of our session. Thank you very much for joining us in this 1 hour session. And we will field any questions. Apologies for going a bit over time, but if you can bear with us for the next 5 or so minutes, we will take you through the questions that we've received and also try to address those questions right now. So I'm just going to the published part there. I see the register has been published. So there you can just have a look and see. How do you verify funds donated are legitimate? So there it's all about doing sort of like due diligence on your donors. Check who your donors are, do media searches on your donors, try to get the company information if it's a company that's providing you with the funding. Try to understand what the donors are involved in, and that's basically how you can check whether that entities are legitimate. Importantly there, you can screen them against the targeted financial sanctions list. And more importantly to that question is just make sure that your funds are going to legitimate beneficiaries as well. So then the next question there, since NPOs receive funding from different institutions, I just want to check with you guys. Do you have a list of possible sponsors for NPOs that focuses on skills development? So there, unfortunately, the FIC is not the regulator that can advise you on that. That type of query you would then send through to the Department of Social Development. I'll just double check with my auditors, with my producers. Am I audible on your side? So what is excessive salary payments? So there again, that's all. If you look at what an NPO is set up for, it's not set up for the personal gain of its founders, of its members. It's more set up for funding of beneficiaries. And when you see that any stipend that goes to members or so forth is very excessive, that might be a red flag indicator that definitely it's some sort of excessive salary payment. It is dependent on the size of and the operations and so forth, but definitely an NPO is not a business structure. It shouldn't be set up for receiving excessive salary payments. That would be a definite red flag indicator. I cannot find where to register NPO on the SARS website. It may be, okay, so there again, that's aimed at SARS. It's a different regulator. If you want to register as a voluntary disclosure reporter, you can go to the FIC website, and then your right-hand tab, right-hand corner at least, you'll see a button that says register or report. If you click on register, it will then take you through to GoNL, and you can capture all your details. Very important there is to capture your identity document. It will ask you for ID number and so forth. So have those type of that information ready. Also copies of your ID document ready so that you can actually register on GoML. And whenever possible, you can file through a VDR, voluntary disclosure report. So we have shared some of the links. I see there's a request for links. So there's a question on voluntary reporting. If somebody reports, submits a VDR, is not protected, how can you encourage reporting? If a person can be sued for reporting and yet is forced to testify in an investigation, it becomes dangerous for them to report. There's no incentive to report. It needs to be reviewed to be the same as a good faith reporting, as is the case with other reporting spaces. Comment well noted. Thank you for that comment. and definitely a good observation in that, yes, it definitely is a voluntary report because of that reason. And that's why we're stating to you specifically, if there's any criminal activity, do not partake and file through that VDR so that you are protected, so that you do know that you have not engaged in that activity. There are also other whistleblowing mechanisms that you can, that is available for these type of reporters in instances where they need to file through those reports. The next one there, as a newly formed NPO, how do I deal with funds donated by an anonymous donor? So there it's part of your governance processes. If you just as good practice, it wouldn't be good practice for NPOs to freely advertise the account numbers for funding to come into that accounts. There should be certain checks done on donors at least. It's advisable to have certain checks done on donors. Obviously, they also to check whether or not they're listed on the sanctions list. The next question, what interventions do you have in place to try and assist NPOs, because it's hard to raise funds and at times you don't even get them. So again, Bongi, that question would be posed to the Department of Social Development, who then would also administrate that whole process of the different NPOs getting funding and so forth. Are the reporting measures the same for NGOs and NPCs? So the term NPOs would cover that NGOs and NPCs. It's an all-encompassing term. So there, when we do recommend this voluntary disclosure report, it goes to all non-profit companies, trusts that are registered for non-profit purposes, as well as non-profit organizations that's registered with a FIC. Okay, so I think from the questions I can see, I think we have addressed most of the questions, but I see the engagement has been quite good. So we do thank you for that. We thank you for taking your time out to attend this morning session. Please download that PCC 41 at least, and also 44A, which provides you with good information on targeted financial sanctions. The FIC website also publishes case studies. I urge you to search for those case studies and also download them, in that you will find that some of the case studies relating to non-profit organizations. So there, this finally, just make sure that you've registered, and the presentation will be sent through to everybody who's clicked on the registration link. From ourselves here at the FIC, we would like to thank you for your time, and we hope to again set up similar sessions like this in future for your sector specifically. If any of your colleagues have not been able to attend today's session, they can go onto the FIC website. There is a links to our follow-up sessions, which will have another session at 12 o'clock and another session at 2 o'clock, which your colleagues can then join. So please do encourage them to join, and also so that they can gain this information. From our sides, thank you, and God bless and goodbye.